Ranging market. A ranging market is categorized by price moving sideways between a certain high price and low price. So let's say that price is coming from an uptrend. So we made a new high and then a higher low, but then wasn't able to trade beyond this previous higher high. And then suddenly price got rejected at this level and pushed the price back to this previous higher low level. All right. So, and then once price rejected this level, at this point, we can now assume that we are in a sideways or ranging market. So it is already confined within a certain price range. So now we can assume whenever price reach this level, it can get rejected and move the price back towards this low price. Okay? So once price reach this low price, we can assume that it can bounce from this level and move back again to this high price. All right? So let's have an example. So gold daily time frame. So as you can see, we are coming price is coming from an uptrend, right? From an upside move, and then suddenly price entered into a ranging or sideways market. So whenever price reach this high price, sellers are coming in, and then once price reach this low price, buyers are coming in. So every time price reach this high price, there are sellers willing to sell the market and then move the price back towards this low price. So same with sellers. Whenever price reach this level, there are buyers defending this level. All right. So for high price, this is well defended by sellers, and for low price, this is defended by buyers. Okay. So another example, British pound, Swiss franc daily time frame. So coming from a downtrending market or a very aggressive decline, price bounced from this level and made an upside move and then entered into a sideways market. All right. So again, high price for sellers and then low price for buyers. So every time price moving back to this level, to this high price, we can expect some sellers coming in. And then this level, we can expect buyers coming in. Okay. So like an uptrending and downtrending market, ranging market doesn't last forever. So at some point it has to terminate and decide on what direction it should go, right? So we have ranging termination. So a clear break of either high price or low price. So a break of high price is what we call breakout, and then a break of low price or lower end of the range is what we call breakdown. All right. So as you can see, we are in a sideways market, and then suddenly price breaks through the upper end of the range. So we have a breakdown, and we should see a higher high, and we can expect, of course, a higher low. Okay. Again, we are in a sideways market, and then suddenly price breaks through the lower end of the range. So we had a breakdown. Okay. So we should see a lower low, and then lower high, and then lower low. All right. So let's have an example. A British pound, Swiss franc daily time frame. So sideways market, sellers rejecting this high price, buyers rejecting this low price, okay? Until price suddenly breaks through this upper end of the range. So we had a breakout, okay? And then price moved to the upside, okay? So this is our confirmation that this range is already finished, and now we can see price moving into one direction. Another example, New Zealand US dollar 5-minute time frame. So coming from a downside move, we then entered into a sideways market condition. So high price, sellers are coming in, low price, buyers are defending until we have a breakout. Okay? So this is our confirmation that this range is already finished, and we can now see price moving into one direction. Gold daily time frame. So coming from an uptrend or an upside move, we entered into a sideways market condition. Okay, so we have buyers at the lower end of the range and sellers at the upper end of the range. Okay, and then price decided to break down. Okay, so this is our confirmation that this range is already finished, and we are now uh going to see a downside move. Another example, US dollar Japanese yen 15-minute time frame. So coming from a downside move, we entered into a range. So lower part of the range, we see buyers, and then upper part of the range, we see sellers defending these levels. Okay, so this one is a failed breakout. Now, this one you will learn in our support and resistance lesson. All right. So, sellers are defending this upper end, and then buyers are defending this lower end until price decided to break down. So this is our confirmation that this range is already finished, and we are now going to see a downside move.